Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, I wish to convey our apology for Lieutenant Governor Dr. Ahmad, who is not able to deliver his address this morning. He has asked me to do this honor, and it is my privilege to speak at this conference organized by International Shari'ah, Research Academy for Islamic Finance Law, Institute of Islamic Banking Insurance London, and Thomson Reuters. The collaboration between research institutes in Malaysia and UK and an international media like Thomson Reuters provides a good platform to foster greater understanding and appreciation to the topic of Shariah governance and its role in mitigating Shariah risk. At the outside, we would like to apologize for not being able to be in London this morning due to pressing commitment at home that has obtained our presence at this conference. Today we wish to share some thoughts on the significance of Shariah risk and its consequences on the Islamic financial industry. In the process, we will share with you some initiatives undertaken by Malaysia in enhancing further the depth and breadth of our Shariah governance framework and the importance of having robust and sound Shariah governance and practices. Ladies and gentlemen, at the onset of the Islamic finance journey, the fundamental code and working principle in guiding the philosophy, principles and tenets of Islamic finance is always and will always be the observance of Shari'ah. As you are aware, Shari'ah is the pillar of Islam that relates to the system based on revelations of Allah subhanahu wa ta'ala through Prophet Muhammad, with the objective to regulate human actions and behaviors. In essence, Shariah is basically a doctrine of duties, legal and ethical obligations. Taking Islamic finance in context, Shariah provides the underlying basis to the practice of Islamic finance to be carried out in a manner that is in line with the injunctions of Islam, observing the tenets, conditions and principles espoused by Shariah. Shariah emphasizes universal values and key provisions that are often ignored in current times. Shariah prescribes to the fairness, certainty and avoidance of speculation and over-leveraging, as well as prohibits usury and financing immoral activities. Failure to meet these obligations would tantamount and give rise to Shariah risk. In discussing Shariah risk, we wish to bring to your attention to the following. Firstly, what are the sources of Shariah risk? Why it happens? And secondly, what will be the impact of Shariah risk on Islamic financial institutions? What are the rights of the key stakeholders to know the gravity of the Shariah risk in an Islamic financial institution? And finally, what is the governance that must be in place to mitigate this risk? Let me begin. Shariah risk normally originates from two main sources: product developments and investments. Shariah risk in product development entails issues like improper structuring of products that did not meet the Shariah tenets, poor processes of implementing the product in the marketplace, and miscommunication by people who are involved in the whole process from product initiation until the post-implementation product review. Shariah risk in investments refers to failure to conduct continuous assessment of permissible and non-permissible sectors due to lack of clarity in the investment policies, and it could also be due to indirect causes such as changes in the criteria and the circumstances that renders the halal investments becoming non-halal and vice versa. This brings us to the second issue on the impact of Shariah risk to an Islamic financial institution. Naturally, violation of Shariah compliant requirements is an unacceptable norm, and Shariah violations would render several implications and brings about reputational risk that leads to erosion of confidence in the Islamic financial institutions. Implications would include reprimanding actions on Islamic financial institutions, which can be both punitive and non-punitive, and in the worst case scenario, revocation of license, like in the case of Central Bank of Malaysia, based on the gravity of the offence. In the Malaysian context, there have been instances of Shari'ah non-compliance issues that have unfolded in recent years, though the numbers remain manageable. However, this may impact the industry if not addressed properly, thus stresses the importance of a robust international Shari'ah review process to ensure all documentations and actions are properly carried out. Having briefed the implication of Shari'ah risk, let's move on to share some of the initiatives taken by Malaysia in countering and mitigating the possible Shari'ah risk, as well as share with you the design of our own Shari'ah governance framework in which we believe will benefit the delegates today. Since the inception of Islamic finance in 1983, Malaysia has always acknowledged the importance of Shari'ah compliance in Islamic financial institutions. The Islamic Banking Act 1983 and Takaful Act 1984 require the Islamic Bank and Takaful operators to establish Shari'ah Advisory Bodies to ensure that its operations are in line with Shari'ah principles. In 1993, we decided to disseminate Islamic banking on a wider scale and allow the existing conventional banking institutions to offer Islamic banking products using their existing infrastructure and branches via the Islamic Windows concept. Specific guidelines were issued, of which the requirement is for the banks to appoint Shariah consultants to advise the banks on Shariah matters. Following the introduction of Islamic Windows, Bank Negara Malaysia observed that several Shariah interpretations made by the respective Shariah scholars on similar issues have raised confusion to the public at large. To address this issue, in 1997, the Shariah Advisory Council of Bank Negara Malaysia was established as the highest authority and sole reference and become the sole reference on all Shariah matters pertaining to banking and takaful. Today, Malaysia practices a centralized Shariah governance model. A centralized Shariah governance model is where all public and key pronouncements on Shariah matters can only be made by the Shariah Advisory Council of Bank Negara Malaysia. In this regard, a well-defined Shariah governance framework has been put in place to ensure uniformity and harmonization of Shariah interpretations aimed at strengthening the regulatory framework and promoting good governance within the Islamic financial sector. In 2004, the Shariah governance was further enhanced when the Central Bank Act 1958 was amended to encourage the court and arbitrator to refer to Shariah Advisory Council of Bank Negara Malaysia for Shariah opinions. While the views of the Shariah Advisory Council are not binding, the arbitrator is bound by the Shariah views. This provision was further improved and solidified in July 2009 this year, when the Bank Negara Malaysia Bill 2009 was passed by the Parliament, that now requires both the court and the arbitrator to take into account the published rulings of Bank Negara Malaysia's Shariah Advisory Council and to refer any Shariah issues to the Shariah Advisory Council for its ruling. And most importantly, the rulings of the Shariah Advisory Council shall be binding on Islamic financial institutions, courts and arbitrators. Apart from the Central Shariah Advisory Council, Shariah Committee at Islamic financial institutions level remains the most important governance mechanism of Islamic financial institutions to ensure compliance with Shariah. To support the legal provisions of the establishment of Shariah Committee, Bank Negara Malaysia in 2004 issued the guidelines on governance Shariah Committee with the objective to define the role, scope of duties and responsibilities of a Shariah Committee. One of the important requirements in this guideline is the prohibition of a Shariah Committee member to sit in the Shariah Committee of the same industry. A Shariah Committee of the same industry means a Shariah Committee member of a financial institution that resides within the same industry. The philosophy of this guideline is to enhance the governance and integrity of the Shariah Committee, as well as to enlarge the pool of Shariah scholars in the Islamic finance industry. The policy has been proven to be successful, whereby from only a handful of Shariah scholars we now have more than 120 Shari'ah scholars serving the financial institutions. Undeniably, these restrictions have proved to be a crucial element in increasing the diversity of the Shari'ah pool, as well as ensuring that conflicting interest is managed. Recognizing the importance of the role of Shari'ah Committee, Negara Malaysia has strengthened further the fit and proper criteria for the appointment of Shari'ah Committee members. While the expectation would be for the Shari'ah Committee members to be competent in Shari'ah, they are also expected to enhance their financial literacy as part of their learning journey. Negara Malaysia also undertakes a screening process to ensure only qualified candidates will sit as a Shari'ah Committee member. A sound and robust Shari'ah governance structure depends in the efficiency of the organization as a whole. The role of other key organs, such as the board of directors, the bank's management, and the Shari'ah compliance functions, have to be given emphasis in mitigating Shari'ah non-compliance risks, since they serve as an integral and important component of Shari'ah governance in each Islamic financial institution. The board of directors is the body ultimately responsible with regard to Shari'ah governance of Islamic financial institutions, which provide the oversight on the effective functioning of Shari'ah governance framework. In this regard, board of directors should have clear understanding of their role in Shari'ah governance, acknowledge the independence of Shari'ah Committee, and should be provided with adequate information to make informed decisions. Board's reluctance to recognize the independence of Shari'ah Committee may have an undesirable impact on Shari'ah. Interference or influence from board would not only jeopardize the governance process, but may also taint the Shari'ah decision. In this regard, the Shari'ah decisions made by Shari'ah Committee cannot be set aside by board and must be taken into consideration in the decision-making process for the bank or takaful operator. With a board who has collective wisdom on Shari'ah-related matters, such rule is always easy to observe. In this regard, Negara Malaysia is considering that the board of Islamic financial institutions to also include industry experts in Shari'ah matters. The management of Islamic financial institutions also has an equally important role to play in ensuring that the executions of business and operations are in accordance with Shari'ah rules and principles. This role can be fulfilled by providing adequate resources and capable manpower that commensurates with the size, complexity, and nature of business to support Shari'ah Committee. In doing so, management needs to understand the underlying Shari'ah objectives and review the institution's end-to-end business processes and activities to ensure full Shari'ah compliance. In addition, management is also responsible for Shari'ah risk management control functions, where identification and assessment of Shari'ah risk would be systematically monitored and controlled to avoid non-compliances of Shari'ah. In dealing with the Shari'ah non-compliance risk within the organization itself, it is encouraged for the Islamic financial institution to establish Shari'ah compliance risk division. The division will provide the check and balance in ensuring all activities with Islamic financial institutions are fully Shari'ah compliant, achieved through an effective Shari'ah review and audit. Shari'ah review conducted will provide assessment on Shari'ah compliance Islamic financial institutions activities and operations by identifying Shari'ah non-compliant risks and put in place control and mechanism to remedy the risk. In addition, Shari'ah audit from time to time will provide an independent assessment and objective assurance to value add and improve the Islamic financial institutions' compliance with Shari'ah. Ladies and gentlemen, let me now move on to an issue relating to mutual recognition of Shari'ah pronouncements. Moving forward, it is important to establish interlinkages with financial centers as well as industry players in promoting Shariah convergence and mutual recognitions to the Islamic finance practices. In this regard, Malaysia has undertaken a proactive approach in building interlinkages among the practitioners, Shariah scholars, academicians, investors as well as regulators. Closer engagement and coordination with the relevant parties would further enhance the ability to promote harmonization that would minimize the impact of market inefficiencies and that would preserve overall financial system stability in the Islamic finance industry. In the collaborative effort to establish diverse experts within the Islamic finance vicinity, Malaysia has successfully organized a number of important international events, such as the Global Islamic Finance Forum and International Shari'ah Scholars Dialogue. We have invited prominent international Shari'ah scholars to participate in a series of intellectual discourse on Shari'ah matters with respect to Islamic banking and finance. These initiatives provide avenues for the development of Shari'ah practices and bring about the harmonization and mutual respect in Islamic finance practices. While at regional level, several gatherings have been organized which brought together most of regional Shari'ah scholars from ASEAN region to discuss current issues with regard to Islamic finance. The efforts have shown positive indication towards mutually recognizing an endorsement of transactions in the domain of Islamic finance, and it is our hope to see more international participations in these events in the future. Ladies and gentlemen, we would also like to encourage the industry to leverage on the talent development and research initiatives that have been undertaken by Malaysia. In this area, Malaysia pioneered the setup of the International Center for Education in Islamic Finance, ICF in short, offering the world's first professional certification for Islamic finance, and the establishment of the International Shari'ah Research Academy for Islamic Finance Islam, a dedicated research house for Shari'ah matters in Islamic finance, as what was told by Dr. Akram just now. We are very pleased with the outcome of these efforts to enlarge the pool of talent in Islamic finance, as well as to strengthen the cooperation in areas of Shari'ah research and application. This conference is one of many examples of Islam's continued efforts to organize dialogue on Islamic finance. Negara Malaysia has also embarked in developing a set of parameters called Principles and Practices of Shari'ah in Islamic Finance. These parameters are designed to ensure that the essential features of Islamic financial products adopted by Islamic financial institutions are derived from the underlying Shari'ah approved principles. The Principles and Practices of Shari'ah in Islamic Finance should serve as a policy document which would provide a more comprehensive understanding of the principles and basis of adopting Shari'ah-approved contracts for Islamic financial products. In addition, the principles and practices of Shari'ah in Islamic finance are expected to provide additional guidance and assistance for the Shari'ah Committee in discharging their responsibilities. To date, Negara Malaysia has issued 2 concept papers, namely Parameter for Murabahah and Ijarah contracts, and a few others are in the pipeline. In conclusion, a strong Shari'ah governance model rests on the concrete efforts of the regulators and the industry players to maintain the highest standards and prudence in the Islamic finance industry. While regulators can put in place the overall governance framework, the real test of meeting true governance is in the practice and combined actions of the Islamic financial institutions, its boards, its Shari'ah advisors and management, guided by high ethical moral values demanded by the faith and religion. Complementing this moral compass are the tools towards fostering greater mutual respect among scholars and practitioners in the form of regular dialogues, guidelines, parameters, as well as talent development. Greater mutual respect need to be continuously pursued, and Malaysia, in our efforts to further promote Islamic finance, welcomes an initiative to shape Islamic finance and exchange knowledge and ideas in this area. On this note, I thank you very much.